Hello, I'm just Ben, here with your Q2 Financial Advisor Sales Highlights. In our last episode, I mused how Q1 showers may bring Q2 flowers. Well, I'm sad to report that we have yet to see any blooms. Q2 sales, in fact, were very muted, matching Q1. Gross sales came in at under $30 billion, and net flows were particularly muted. In fact, the Barbenheimer double feature is likely to bring in more UK box office ticket sales by the time this video drops than we saw in net sales into the channel in Q2. But this is a bigger picture than just the Financial Advisor channel. We have other data points that reinforce the idea that UK households are likely facing a number of financial challenges. If we look at our broader UK domiciled fund universe, we've also seen muted flows this entire year. Combine this with the fact that if we look at the Bank of England deposit data, again, we see very little activity. Therefore, it's likely been a very tough market in which to sell into. Looking forward though, I'd like to say there's sunnier times ahead. However, we're just about to drop our UK domicile fund forecast for this next 6 months, and I can tell you in advance, it's looking quite muted. All this isn't to say though that there wasn't opportunity out there in Q2. To better identify the opportunity, let's run through some fast facts. Starting at the wrapper level, we saw positive flows into both pensions and ISAs, with of course the beginning of April being the end of the past ISA season, but we saw negative flows when it came to the non-tax advantaged accounts. Switching now to the firm level, we saw 800 different firms post net inflows of over 1 million, with 391 of these firms being a repeat from Q1. Keep in mind though, this is just a fraction of the thousands of firms we track in the Financial Advisor channel. Now switching into more of the fund detail and starting at the IA sector level, what did we see? When it came to the sector, the biggest mover we saw was UK gilts, which shot up into second spot. Rounding out the top 10 though was 4 other fixed income categories. Combine this with strong sales still into volatility managed funds, as well as heavy outflows, particularly of UK equities, and you get the sense that investors are positioning themselves defensively, particularly when it comes to the UK. Now moving on to the active passive trend line, we saw another continuation here as to what we saw in Q1. And that is passive funds had net inflows of around 1 billion, whereas active funds were 1 billion to the negative. When it comes to model portfolios and their influence over sales, from a net sales perspective, it was pretty muted. Essentially, fund sales in situations where it's not associated with a model and associated with a model performed similarly over the quarter. This was also true if you take the ESG perspective, in that ESG funds, those funds with an ESG term in the name, and those funds without also saw similar performance over the quarter. This is actually a trend we're also seeing at the UK domiciled fund level, looking at the wider universe, in that we've seen a drop-off in flows towards ESG funds and a slight pickup in flows towards those that are not. With the FCA about to come out with some more rules on this, I expect activity here may remain muted until that occurs. Now, this brings us to sort of who were the big winners in the second quarter. If we look at the fund provider level or the fund manager level, we had a brand new top 3. The top 3 in Q2 included BlackRock, HSBC, and Dimensional. Looking down to the fund level though, we note that in the top 10, Fidelity was the only fund manager to have 2 funds placing in the top 10. So this was the story for Q2. If you're interested in better understanding your data, please reach out.